What is good, YouTube? Today is January 14. Today is January 14. It's currently 1 p.m. We are done with the trading day. As we can see here, we took one loss, one win. I'm going to be going over my breakdown, my analysis on why I took these two trades right here. So let's just talk about coming into market today. We obviously had news. We had news today, and that news was core PPI month over month and PPI month over month as well at 7:30 or 8:30 Eastern. As we can see, we have that data high right here. And we see market open, and we have this manipulation off rip, off the open. And when I was up around 7 o'clock when I seen this data would get put in, and we still have all of these draws to the downside, my first thought process is, if we come take out that data wick high, we are going to be falling and shorting into all of this, all of our lower draws, all of our draws to the downside, as we can see right here. You know, we've been gearing up for this heavy sell-off for the past week and a half, in my opinion, and it just hasn't come. And today we finally got it. So coming into the open, you know, so simple. We are marking out our lows and our highs. We have our London high right here. We have our Asia high right here. They never got tagged. We have a New York PM above. And once again, we created this data high right here. So my thought process is that we're going to come back and tag this data high and then proceed to move lower in a shape like this and take out all of our draws. But one thing I failed to realize was that that data wick high was put in at the 50% CE consequent encroachment of this 15-minute bearish gap, right? And so we can see that this 15-minute bear was respected to the T, and you probably could have taken shorts, honestly, all the way down here for a full 300-point move if you're trading pre-market. But I'm not trading pre-market. I was waiting to open, and so I'm waiting. Off of market open, we end up creating a 15-minute bearish gap, which was, in my opinion, the play of the day, or the gap of the day, or the second gap if you want to count this as the first gap. But I had this marked out as my gap of the day, and off of the market open, we see this gap get put in. And once again, I'm constantly thinking about different scenarios that we can take to find the best play, but I obviously see that our draws are to the downside. But if I was to hypothesize and say, okay, I want to take such and such, I can say, if price, since price created this 15-minute bearish gap, we can look to trade away from it, come back, tag it, and run to our lower draws. Or we can come back, or we can create the 15, come back into it, inverse it, and then we're targeting our data highs and maybe our London and our Asia up here. But that wasn't really in my mind. As we can see, though, I did end up taking a long, which is the opposite of everything I'm saying right now. But the reason I took this long was because after market open and, you know, market settled down, it's 9 a.m. We ended up sweeping out this London low. We swept our old New York PM low that we have marked out here, and we swept out this last New York PM low that we have marked out here. With hindsight, I'm gonna go into this and explain why I shouldn't have taken this long. One, because my bias, I don't really like using my daily bias, but I do see where my draws are, and I can see that all of my draws are to the downside. So I should still be looking lower. Second, but let me tell you why I did take longs. I did take longs because after we ended up sweeping out all of this low all of this lower liquidity, we what's it called? We swept out this lower liquidity. We ended up coming back into this 15-minute gap. We sort of inversed this 1-minute bearish gap, and I thought, okay, it was kind of a strong reaction. We did end up leaving this London low here, which I should have taken into account, but I forgot mid trading session because I knew that we needed to come back to tag this London low that we never fully swept. But I saw that it didn't get tagged. We left it down here. We had a strong V-shaped recovery. Price had respected a 5-minute inverse to the downside. Where would that inverse be? As we can see, we have this 5-minute bearish gap that got inversed as we are V-shaping out of this recovery. And that's just a lot of confluence all at once. And so I took that long and I was okay with it. It was kind of in the premium at this point in time. I think that was the initial tag of our 15-minute bearish gap, which we know that higher time frame gaps do supersede lower time frame gaps. But you know, we had a V-shaped recovery. We just swept 3 different draws in liquidity. We inversed a 5-minute bearish gap to the downside, or to the upside. We inversed it to the upside. It was just a lot of confluences that could have showed longs, and it wasn't a cheap trade. I did take a 58-point stop. I was using micros and scaling in and out, but it was a harsh loss. I believe I lost 1K per account off of this trade, and once again off this long, you know, we inversed this original 5-minute bearish gap. We inversed this 1-minute bullish gap. I would be taking this long to our data highs and once again maybe our London and our Asia up here. But obviously that didn't work out. That was at 9:30. I waited, and as you can see, if I take this off the chart, we can see here that this is just a clear continuation shorts to the downside, and we can see, let me hide all these drawings once again. We hide all these drawings. We can see that right here, we come down here, we come back into the 15, and we come down here and we take out all of our draws to the downside. So that's what I meant by continuation shorts. And honestly, you can really see it from up here, this first 15-minute gap that we created. You see that we're trading out of it. Continuation. We have another 15-minute gap here. More continuation after we tag into it. We have another 15-minute gap here. More continuation as we tag out of it. And we are creating lower lows and we are not creating higher highs. So yes, I should have taken I shouldn't have taken longs right here, but in the middle of the trade, I believe there's just so much going on, you know, that it kind of gets messy and convoluted. But after that, I waited. I'm just sitting here. I'm waiting for price to, you know, give me another opportunity. I should have, after this short, I could have taken this 1-minute short to the downside as well. The reason I didn't was because, you know, I just didn't. I really just didn't. I'm not gonna lie. You know, I didn't want to seem like I'm switching bias. I just took a long. I'm taking shorts. Even though my original bias coming into today was that we do need to clear our lower liquidity, our lower draws on liquidity, but I just didn't feel like I just didn't want to take that trade. That's it. But I'm waiting, and then I see this setup right here, where we waited. We once again create that 15-minute imbalance that we have right here, and it is once again continuation shorts to the downside. Let me do that. And so you can see that this is just so perfect. We create this 15-minute bearish gap right here. We've waited for price to come back into it. Once we've seen that, we are now trading out of it. And I got entry at 568, and I took my profit at our London lows and our Asia lows. It was a pretty clean draw. I knew this would be the draw all day, to be honest. I just don't know why I took these longs. Just a lot of thoughts racing, I should say. But once we got in this trade right here, we went break even at this point. We're going break even quickly. We're seeing that there's a lot of volume in the market. We don't want to see this flip. And after we just took it was a 58-point stop. I'm not really trying to be risk heavy in the market with a 40-point stop or 38-point stop. But I had my SL above the gap. I went break even at this swing low. And we can see that we pretty much ripped through it off this 1 minute bearish gap that gets created. And if you want to, I'm not gonna lie, this is just another, on the lower time frame, this is just another continuation shorts. You see this 1 minute, it tags back into it, and we see that price delivers 2-hour draws to the downside. So as I said, I ended up losing 1K on the first trade, but I did make an 1K back off of this trade. We hit for 118, I believe. We took our P's at 115 points. But on my 5 my funded accounts, 4K. On my 2 Apex, 1600. So it was like I made 800 per account. But yeah, that is my trade for today. We are up $5,600. Just trying to close out the week green. God is good. I hope y'all boys caught a dub. That's really it.